Good morning, bulls and bears, and welcome to today's market update. Let's break down the latest moves in the US dollar, oil, gold, and the Australian dollar. Starting with the US dollar index, we can see the dollar is trading around 97.6, edging higher as a partial US government shutdown delayed key labor market data, keeping investors cautious. While President Trump signed a $1.2 trillion budget to end the shutdown, some funding risks remain unresolved. The dollar also gained support after Trump nominated Kevin Warsh as the next Federal Reserve Chair, seen as less dovish alongside strong US manufacturing data that has reduced expectations for aggressive rate cuts. Markets still expect two Fed cuts this year, likely around mid year and October. Technically, the dollar's recent rebound appears to be a corrective move rather than a trend reversal, with the broader downtrend still intact. Momentum has weakened and the price remains below key short term moving averages. This week, the index is expected to trade between 97 and 97.8, with resistance near 97.73 and 98, and support around 97 and 96.91. Turning to crude oil, we can clearly see it's trading near $64.25 per barrel, rebounding on rising geopolitical tensions, particularly around US Iran risks and concerns over supply disruptions in the Middle East. Additional support comes from improved global demand expectations following a US India trade agreement and ongoing uncertainty tied to Russia Ukraine sanctions. The 64 to $64.5 range remains a key technical background. Holding above this zone could allow a rebound towards $66.24, while a breakdown could open a pullback towards 61.1 and potentially $60. Gold has surged back above $5,000 per ounce, posting its strongest daily gain in over a decade as investors rushed back in after a sharp pullback. Safe haven demand remains elevated amid geopolitical tensions, even as expectations for rapid Fed easing have softened. Technically, gold is in an oversold rebound phase, with bullish momentum improving but signs of potential overbought conditions emerging. Near term trading is likely to stay volatile between roughly $4,831 and $5,110. Key downside levels to watch include 4,944 and $4,900 per ounce, while a break below 4,831 could increase downside pressure. Finally, the Australian dollar against the US dollar continues to strengthen, trading near zero point 0.7, supported by a hawkish RBA and strong services sector data. Markets are now pricing in a high probability of another RBA rate hike in May, with further tightening expected over the next 2 years. Technically, the pair remains in an ascending channel, maintaining a bullish bias. A break above zero point 0.7094 could open a move toward zero point 0.7158, while support sits near 0.6969 followed by 69. That's your market update for today, and I'll see you in the next one.